Are you a beginner in trading and want to learn the option chain analysis? Then this video is for you. Watch the video till the end. Hi friends, welcome to my YouTube channel Trader Chitra. In this video, we are going to discuss about open interest and volume, also how it signifies in the derivative trading. What is open interest? In the name itself, it tells you the interest that are open is called open interest. Simple to understand, right? Open interest or OI is a number that tells you like how many contracts in futures or options that are currently open in the market. Open interest is the total number of open derivative contracts such as options or futures that has not been settled. It is the number of contracts being traded and not the total of both. Also, open interest is commonly associated with the future and options markets. If the open interest is increasing means what it represents, we will see that. That is, increase in the open interest represents new or additional money that is coming into the market, while decreasing in the open interest indicates the money flowing out of the market. I hope now you are all clear with the definition of the open interest. Let us see how OA is being calculated. So these are the traders, trader A, trader B and trader C, like that. This is the OI and the volume. Say for example, trader A, he is buying 10 contracts and trader B is selling 10 contracts. So the OI is 10. That are the unsettled contracts. And the volume trader on that particular day is 10. So on Monday, trader C, he is buying 50 contracts and trader D, he is selling 50 contracts. So on Friday the OI is 10, again Monday we have 50. So 10 plus 50 is 60. That is the total, that is the unsettled contracts. So the volume trader on Monday, that is 50. So 50 is the volume. On Tuesday, trader A, he sold 5 contracts and trader E, he bought 5 contracts. So there won't be any change in the OI, it remains as 60. So on Wednesday, trader B bought 5 contracts and trader C sold 5 contracts. On the same day, trader C, he sold 20 contracts. So it will be minus 20. And trader D bought 20 contracts. Okay. So there is no new contracts has been added, only the existing contracts has been reduced or squared off by the traders. So the OI is reduced to 35 now. Okay, and the volume trader on that particular day is 25. On Thursday, trader A, he is having now 5 contracts. So he is selling the 5 contracts now. He sold 5 and trader B, he bought 5. So there is no new contracts has been added. So from 35, again the OA is reduced to 5. We are reducing the 5 from 35. So that is 30. OA is 30 now. And volume trader on that particular day is 5. Why OA is important for a trader? Where there is more number of open positions exist at a specific strike price. We can understand that more participants are at that level, hence we can say that level can act as a major support or the resistance level. Open interest from seller's perspective. When a trader buy an option, his risk is only premium. That is, risk is limited and reward is unlimited. Whereas from seller's perspective, he has an obligation to sell and has limited reward but unlimited risk. Hence, the seller should be extra cautious on that level. Hence, the seller will defend that level. That is, it will be a support or resistance. What is long and short? When we buy an option, we call it as long. At the same time, when we sell an option, we call it as a short. Now, we are into the NSE website and the option chain we are looking is for the Nifty 50. This is the strike price which we can see here. Okay. And the details which we can see on the left side of the strike price is for the call side, and the details which we can see on the right side of the strike price is for the put side. As we discussed earlier, the column OI refers to the unsettled transaction. The level at 18,000 has more number of OI, that is 2,39,000 contracts exist. It means 2,39,000 contract has been sold and bought. Since 18,000 has maximum number of OI, this level 18,000 can act as a major resistance for upside. If you see here the column change in OI, we can see that 1,35,000 contracts has been added. That is, out of 2,39,000, this 1,35,000 has been freshly created. The other third column is the volume. On volume we have 35,18,000 contracts. So for that particular strike price, the volume traded on that day is 35,18,000. The column LTP is the last traded price, that is the premium of the particular strike price. Next we can see how can we interpret this option chain analysis for our trading. We can see the price and the OA comparison. Here the price is increasing and OA also increasing, means the trend is bullish. In the OA view we call it as a long build up, and the price is decreasing and the OA also decreasing. So what is this means is the bullish trend is going to end and we can expect the reversal. That is, we call it as long unwinding. Third is the price is decreasing and we can see an increase in the OI. So the trend is bearish and we call it as a short build up. Fourth is the price is increasing and we can see the decrease in the OI. So the bearish trend is going to end and we can expect the reversal. So we call it as a short unwinding or covering. I will explain this in detail. Here you can see that the price is increasing, that is price is going in an uptrend, and the OA also increasing. So what this means is that the more number of traders are buying the calls at that particular zone. So the trend is bullish. So we come to conclusion that the overall trend is bullish. Next, the second one, the price is decreasing and the OA also decreasing. That is, price is falling down and OA also decreasing. Means what? At the particular zone, those who are bought the call, the traders who bought the call, or those who are sellers who wrote the put, they are booking their profits. So that we call it as a long unwinding. So there is a pause for the bullish trend and we can expect the strong reversal from there. Here the third one is price is falling down. Okay. At the same time we can see that the increase in the OI, because at that particular zone more number of sellers are entering. So the overall trend is bearish. That we call it as a short build up. The last one, the price is increasing, means price is moving up, going up, and we can see that the decrease in the OI, means there is a pause for the bearish trend and we can expect a strong reversal from that zone. In OA view, we call it as a short unwinding or we call it as a covering. So this is how we will relate the price and the OI. Next we will see how to compare price with the volume, that is price versus volume. There are few traders that they will trade only with the volume. They will not use any other indicators. Here we can see that the price is increasing and volume is increasing, means price is moving up, that is price is going up, and also we can see that the volume also increasing, means we can blindly say that the trend is bullish. Second is that the price is falling down. We can see that the price is decreasing and volume also decreasing, means what it clearly says is that the bearish trend is going to end and we can expect the reversal. Here the price is decreasing and volume is increasing, means that is price is falling down and at the particular zone we can see there is a huge volume, that is the trend is bearish. The last one is that the price is increasing and volume is decreasing, because the price is going in uptrend but there is no volume in the uptrend. Okay, So what we can understand is the bullish trend is going to end and we can expect the strong reversal from that. So here this is how we have to relate the volume and price. Why short covering is crucial? We will discuss about that. Okay. So as we discussed earlier, in option chain, we always look from the seller's perspective. Here 18,000 call has the maximum OI, and if the price has to break 18,000, we need more volume, and the price breaks 18,000, the shorters at 18,000 will cover. That is, they will also buy the calls. Hence, there will be sharp up movement in the price. Hence, short covering will shift the price sharper. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.